Thanks, Sandy. My family, we were in Vermont from 2009 to, or 1999 to 2009, planted and pastored Daybreak Community Church, and also served as a church planting catalyst with Baptist Churches of New England. We spent 10 years in Los Angeles and 5 in Boulder, Colorado, and have just recently moved back to Vermont, up in the mountains this time. We're in Waterville, about 12 miles from Smuggler's Notch Ski Resort. And as Sandy said, pastoral leadership development, pastoral care. I'm new and I'm excited to be here. I'm excited about the topic. My wife asked me to take really good notes, and Sandy sent me a list of some of the questions that have already come in. And one of three things, as I looked at that list, these are great questions, or I don't really know anything about the topic, so they're all great questions to me, or they're great questions and I still know nothing about the topic and I'm looking forward to learning. We have Allison Michaud and Kaitlin Salsbury. They're with us and they're with Wisdom Over Wealth. And I just wanted to say I love the name. The name is a great name. It reminds me of Proverbs 8, verse 10 and 11. The writer says, choose my instruction instead of silver, knowledge rather than choice gold. For wisdom is more precious than rubies, and nothing you desire can compare with her. So Allison and Kaitlin, I would love it if you would just take a couple of moments, take a turn. Allison, maybe you go first, and then Kaitlin, just tell us a little bit about yourself.
Sure. Yeah. So my name's Allison Michaud. I am a partner here at Wisdom Over Wealth. My background is that I'm a CPA, and I came from a Big Four accounting firm doing personal taxes and business taxes. And now I've been with Wisdom for 6 years. It's been awesome. I came to Wisdom and worked when my daughter was born, and she's 6 already. I don't know how that happened. So, but I'm a CPA and work with taxes in churches, nonprofits related to churches, and some of the businesses related to churches for Wisdom.
And I am Kaitlin Salsbury. I've been working for Wisdom for 9 years, which when we were putting this together, I was like, no, it can't have been 9 years. And my LinkedIn confirmed it's been 9 years, which has been great. Prior to working at Wisdom, I actually, up until 2 years ago, lived in the Northeast. I lived in Massachusetts, moved out there after college, and worked with a denominational office and pretty much did what I do now, which is church bookkeeping. I learned church bookkeeping and I trained churches and helped churches that were in crisis, and I loved it. And when that job ended, I found Wisdom and love the idea of being able to still do accounting, but do it for a purpose. So I have my initial job at Wisdom was as our payroll manager, and that has changed. But now I work with specifically our Foursquare pastors, Assembly of God pastors, and churches, and I oversee payroll and some projects such as like the ERTC. So it is a pleasure to be able to work with churches and see the kingdom advanced in a lot of different ways across a lot of different groups of people. And it has been fun to get to know pastors and churches from BC&E over the last few years. So it's great to be here and we're very excited.
Well, thank you. Go ahead and you guys can get started. And if you have questions you want to add to the chat, please feel free to do that. We'll monitor that. And they may open up opportunities for questions, or they may ask me if there are some questions that maybe they could answer that are questions that you guys have that they don't cover.
Absolutely.
So why don't we give you guys just an idea of who Wisdom is, other than I did like the connection to scripture with our name, because we do really believe that God gives wisdom, and more than him wanting to build wealth, he wants us to use the resources that he's given wisely. And so our mission is to partner with churches to see the kingdom advance through both righteous and practical financial solutions. We believe that those are not contrary to each other, but instead that those work well. And when we're aligning those, God is able to bring resources, and we're able to steward those well. Our team, we have 11 highly skilled individuals with both church and nonprofit experience. Every single member of our team has a personal walk, faith walk, and 2 of our members are certified public accountants, 2 are licensed clergy, and we have a whole bunch of services that we do. Payroll, accounting services, personal tax prep, financial statement preparations, 990 and 990T filings, and a bunch more. So we're always looking for ways that we can serve churches and nonprofits and see the kingdom expanded.
Thank you.
Anything I missed, Allison?
No, you did great.
So today's objectives, just so that you know kind of what we're trying to make sure that you guys walk away with, is first, provide just the basics of clergy compensation. It's important to have a really firm foundation before you can kind of go off of that to talk about things like clergy taxation. So we're going to explain how clergy are taxed, how the IRS looks at that, and then actually give some examples of what it looks like in a personal tax preparation when a clergy is involved. So those are kind of our 3 main things: provide the basics, explain clergy taxation, and then give an overview to kind of show you what it should look like when you get to your personal tax preps. So clergy compensation, we're just going to jump right in. And it's always good to start at the beginning, and a good beginning is a definition. So who counts as a minister? Because I think in churches, ministry can our definition of what a minister is does not always, not 100% connect to what the IRS or the government says a minister is. So when we're talking here about clergy, we are talking about it in the sense of the IRS's definition. So the IRS's definition is someone is clergy when they're licensed, commissioned, or ordained, and when they're employed to provide ministerial duties or ministerial services. So licensed and commissioning, in their opinion, normally includes some sort of training, whether it's formal schooling, seminary. It could be as simple as like internal in the church, you have to walk through a process that has training involved. They would consider that having to be part of it, to be licensed or commissioned. The second part is the provide ministerial services, or a very fun word that I've got is a sacerdotal duties. I really love it. But it has to do with, do you actually, do you preach? Do you serve communion? Do you do ministry? It's not enough to just have the title of clergy and even have the training, but you actually have to be serving in offering sacraments, whether it's preaching, communion, things like that. So with that baseline, we can then talk about the types of compensation that there are for clergy. So there's 2 main aspects of clergy compensation. There's not just 2, but there's 2 main kind of buckets that we would say you would put compensation into. And the first is clergy salary. Clergy salary is taxable for income tax and SECA, which we're going to talk about. SECA stands for the Self-Employment Contribution Act, and we're going to explain that a bit more in a few minutes. So if you're like, I don't know what SECA is, don't worry, we'll get there. But clergy salary is taxable for income tax and for SECA. The second one is clergy housing. This can be cash housing, this can be in-kind housing, it can be a combination of both, a parsonage. All of that is kind of in this bucket of clergy housing. And clergy housing is only taxable for SECA. So it's not taxable for income tax. Other types of compensation, bonuses, pastor appreciation, gifts, benevolence, all of those in the IRS's mind would fall within the bucket of clergy salary. So it has to be treated the same for taxes. That means taxable for income tax and SECA. There are other types of compensation. So there's taxable fringe benefits, like medical reimbursements that aren't considered part of a group plan. Personal use of a company car would be another taxable fringe benefit, something that can be offered. It's something that can happen, but it should be taxed. And those items would be taxable for income tax and SECA. Non-taxable fringe benefits would include medical reimbursements that are like a QSERA, so a qualified small employer HRA, or an ICRA. Those are all like approved group plans that are established. Cell phone allowances, those would all be considered non-taxable fringe benefits. And because they're non-taxable, they aren't taxed for anything, which we love. So those are kind of additional buckets that fall beside the big buckets of salary and housing. One is taxed, one is not. So we do have something to kind of help in terms of compensation, because we found that there's a lot of questions of like, well, how do we even set a compensation plan? Maybe you're thinking, you know, I have maybe one of these. How do I add more? What would be the best in terms of like a tax advantage thing that can be put together, a package that can be put together? So we have what's called a pastor's compensation pyramid. And the idea is that you'd start at level 1, and as you can, you would add additional things. So for instance, if you're receiving salary, but you don't actually get any of your business expenses or ministry expenses reimbursed, reimbursements those are all business expenses. Those are all church expenses that you can be reimbursed for without being taxed. And it would be better to maybe lower your salary and receive these reimbursements, because at the end of the day, you're having the same amount in your pocket or in your wallet, but one is taxable income and one is not. So starting at level 1 and working your way up, it changes the taxation. So level 1, non-taxable. Level 2, the medical expense reimbursements that are approved plans. So those are specifically like group plans, QSERAs, ICRAs. Those also tax-free. As you go into level 3, you'll see that's only SECA. And then level 4 and level 5, each of those are taxable for income and self-employment. So if you'd like this, you could scan the QR code, or I think we were going to try and get you guys the link. Perfect, Allison. So you can click on that link, download it. If you have questions, you can always let us know. So housing allowance, we talked about salary. I think most people know what a salary is. So we're not going to get much more into what that means. But housing allowance, we hear all the time a lot of different understanding about what a housing allowance is. So housing allowance, and my slide is slightly wrong. It says can be either in kind or cash based. Really, there's 3 options. In kind, which means that it is not cash that's received. So a parsonage, something that the church owns that somebody's living in. So it's not cash received, but it's still a benefit that's received without the exchange of money. So in-kind housing or parsonage, cash-based, or a combination of both. Because oftentimes we find that when somebody is living in a parsonage, there's still expenses that they are incurring that are housing expenses that they could actually receive cash instead of salary and be able to claim. This is because housing allowance includes the rent or mortgage, property insurance, utilities, cleaning supplies, specifically cleaning supplies for like, well, I guess the only cleaning supplies most people buy are for your house, right? Your kitchen cleaning, bathroom cleaning, whatever, fill in the blank, cleaning supplies, decorations, and furniture. All of that can be included within a housing allowance. The calculation for housing allowance is the lesser of either the amount declared or approved by the church, because a housing allowance does need to be approved by your church yearly. So it's not a once and done, it's an every year. The great part about that is that it can change, because as we've experienced over the last few years, there's been increases to living expenses, property value. The things that we're having to spend on housing is a lot more than it was 5, 10, 15 years ago. And so housing allowance should be updated every year. You should be looking at, what was I spending? What is my mortgage? What is my rent? What is my utilities? What is actually what I experienced last year, so that I can claim that. Your board or your council can then approve it every single year. And that becomes this like amount declared or approved by church. So that's one. Two is the actual amount expended to provide like your house. So those are the actual expenses, your actual utilities, your actual spending for cleaning supplies and furniture and decorations, keeping track of all of those and what did you actually spend. Or the fair market value of a furnished house or apartment. So those three, we look at those three, and the lesser of those is what is then used on your tax return as your housing allowance. Now with that, because say the amount that's declared by the church is more than what you actually spent, the difference between those would be reclassified when your taxes were put together to taxable income. So it would just move to the salary bucket on your tax return. I'm going to assume that, Allison, you may mention that a bit more later on. Maybe?
Yeah.
Okay, cool. Don't always like to, I don't want to assume and say something and Allison be like, I wasn't going to talk about that. But it's nothing to be afraid of. It's good to do due diligence, do your best that you can do when claiming. You don't want to claim something that's way more than you would spend, but it's also not going to be the end of the world if some of that gets moved over. It just will be taxable for income tax as well as SECA. With that, we have another free document that we wanted to give to you guys. It's a housing allowance form. A form like this is very helpful. Number one, as the individual who is claiming housing, to be able to actually walk through and write out what are your estimated expenses for the year, and then to keep track of what it is that you actually spent, to be able to use that with your taxes. So if you'd like, there's kind of two ways that you can grab this. Again, the QR code that will take you to our store on the website. And then you can download it from there. It does ask you for some information, but it's free. The second way is, I believe we put a link. I mean, both ways will take you to our website and our store for the free item. But one is a link and one is the QR code. We wanted to make sure that you guys had the opportunity to grab this. I have seen a lot of people begin to fill this out and be like, oh my gosh, I didn't know that all of these things were things that I could claim. So if you've never seen this or not done this, I think it's a good exercise to make sure that you are claiming your full housing allowance as you should. So I think we're getting into our clergy taxation section. So Allison, I think you're up.
Yeah. Okay, so the first piece of understanding the IRS's mind, which we don't, I mean, honestly, do we really want to go too deep in there? I don't know. But for your purposes, we want to at least understand what they're understanding your employment as. So that's why clergy are considered dual status employees per the IRS. Does that mean you're really self-employed and an employee? Technically, no, but that's the way that they have to filter it through their system to get the housing allowance to be able to only be taxed for self-employment. So for income tax purposes, you're only taxed on your salary, that first piece that Kaitlin talked about a minute ago. But then for your housing and you are taxed for SECA. So actually both salary and housing are taxed for self-employment. You'll see Form SE on your tax return. So both of those, salary and housing, are for SECA, but only salary is for the income tax. So, and then let's go to the next slide, Caitlin. For some of you, you might be saying, well, I opted out a long time ago out of Social Security, and that would only be through Form 4361. And then you would not be subject to SECA at all for housing or for your salary. And so this is where a minister would opt out. And they would do that because they have a belief that they should not be a part of group insurance through the government. But if you do have that belief and you intend to do that, I have a word of caution for you. Just be really careful about making sure you save enough for yourself for minister's retirement. If you guys have heard of Guidestone through the Baptist Convention, they have what's called Mission Dignity. And that is one of the reasons why that was created, because there were ministers who opted out of Social Security and then were not able to provide once they got to the end of their career. So just a word of warning, but that's something that if you have some of this is a little different for you.
So
Okay.
clergy withholding, I think just to make sure that we are all on the same page, SECA, when we talk about self-employment tax, SECA, what that means and how that's different to a non-clergy employee is non-clergy employees have FICA calculated. So you would, if you have ever held a job that is not clergy, you would have seen on your pay stub Social Security and Medicare calculated. You would have paid in half of the 15.3%, and then your employer would have paid in half of the 15.3%. For clergy, that full 15.3% for Social Security and Medicare is on them to pay. It also is not automatically calculated within payroll. So there's no way, because it's considered self-employment, payroll systems don't have a way of calculating that. So the onus is on clergy to both know what that's going to be and to pay in. The IRS feels very strongly about not getting money in a timely manner. And so they expect, if you are going to owe SECA, and Allison, there's kind of a percentage or an amount that they kind of expect, right? Like for quarterly tax. Do you know what that is?
So there is something called safe harbor, which is where the tax you owed last year, you need to pay a quarter of that per quarter in to make sure that you don't get dinged, I guess, with a penalty for the following year. So that is kind of, they call it safe harbor because you don't have to estimate exactly what you're going to make for the year, and that can be important for some of our pastors. We're not exactly sure, but if we pay a quarter of the tax owed per quarter for the next year by those due dates, then you are in what's safe harbor and will not have a penalty, even if you double your income, in the next year. So that's what we usually recommend.
Yeah. So quarterly tax deposits are due by those owing SECA. One thing that we often recommend, especially if you have a payroll system, is that you can actually voluntarily withhold whatever you'll owe or a portion of what you will owe through your federal withholding line. It's just additional federal withholding. And with that, that sounds funny because you're like, well, it goes to the federal withholding line. Well, the IRS doesn't look to be like, well, this is how much you put into the bucket that's federal withholding, federal income taxes. This is how much goes into your Social Security and Medicare, and those don't equal each other. And so you owe us all the money. What they do is there's a bucket and all of your taxes for the federal government goes into it. And when it's calculated how much you owe, they say, did you give us enough? Did you give us too much? Did you not give us enough? And if you gave them the right amount, cool, you're good. They don't owe you and you don't owe them. If you put too much in the bucket, they give it back, or you can put it towards your next year. And if you didn't pay enough, they are like, we want our money, please give it to us. And so that's more of how, think about it, like I think about everything and what bucket does this belong in. And so like when you withhold through the federal withholding line, you're just giving you're putting money into the bucket that is your taxes at the IRS. And so when you do your tax return at the start of the next year, you just need to make sure you've put enough in there, like Allison said, so that they don't ding you, they don't give you a penalty. So that's clergy withholding. And I highly recommend, if you're not withholding and you find that you owe every year, the additional withholding, extra withholding is very helpful. And then you spread it out over the year versus owing a lot all at once. So let's take a look. It's always helpful to kind of get an idea of where you're like, okay, so you said all this stuff. What does that look like? So we wanted to show you first and foremost a pay stub that's incorrect. So if your pay stub looks like this, then there's probably a high likelihood that you're not set up correctly. The reason for this is we talked about that salary, and that if this is a clergy who's been clergy for the full year, so all of last year, all of his salary and housing should be set up as clergy withholding, which means that he would need to pay in for self-employment, not for FICA. This here is showing FICA. It's showing federal income tax, Social Security, well, federal income tax, which is fine, Social Security and Medicare, which are both part of FICA, and this one would be California, so the state income tax, if your state has that. So if you see that on your pay stub and you were clergy for the full year, then you're not set up correctly within your payroll. The one caveat to this is that most clergy don't become clergy January 1st of a new year. It's normally at some point within the year. And if that's the case and you have been working for the same church, you will have a pay stub that could look this way. Not necessarily the current part of it, like if you're getting paid clergy, that current should not have anything, but you may have some in your year to date because you would have changed from just a non-clergy employee to a clergy employee in the middle of the year. And because you're one person with one Social Security number, that would all show up both on your pay stub and your W-2. So for the first year that you're licensed, it can be a little bit like, wait, what? But then following years, you should not have Social Security or Medicare. So to give you an idea of how it should look, this is how it should look. This is if you're receiving cash housing and salary, maybe a couple of other things. You'd see that there's federal income tax line, state income tax line. This example, they're not withholding anything, but it's there with no Social Security and no Medicare. So no actual withholdings, but they're set up correctly in this instance. Before we get into what an example of a 1040 is, for you guys, there are a couple of other things we wanted to note. One is that it actually is against the law to pay a clergy on a 1099. I would like to give one caveat to that. It is, say you go to a church that is not your own church, you're not employed by them, and you speak and they give you an honorarium, then most likely you're not their employee, so you would be a 1099 at that point. So this doesn't mean that you never would get a 1099. It means that when you are employed by a church, the IRS says it's illegal to pay them under a 1099 because they're considered dual status. And so, or you're considered dual status. So that's the reasoning behind it. Even though there's an aspect that is self-employed, you're actually not self-employed for the full, as an employee of the church. I guess that makes sense. So one additional thing, and if you had more questions about this, you could ask us beyond here, but churches can help clergy when it comes to owing SECA. And we would call this a Social Security tax entitlement. Also, internally, we call it a SECA gross up. So churches can decide that, hey, I mean, we pay FICA, half of FICA for our non-clergy employees. We want to help our clergy employees. So we'd like to put towards 50% of what they would owe. Churches can do that, but that amount that is given, that entitlement, has to be treated the same as salary. So it would be added and would need to show up on their W-2 box 1. It would be taxable for income tax and SECA. I know internally with some of our payroll clients, they like to do this, and we work with them to do a calculation so that they both know what they'll owe with that so that they can withhold. And we make sure that the gross up actually helps them because it's what I call a rolling calculation. The more you add in, the more SECA that's owed, and then that changes to 50%. So we work with the churches to get that to something that makes sense. And then we say they should probably withhold this amount at the very least, so that they can put it through their federal withholding line. I think what's next, Allison, is clergy taxes, and you get to kind of take it away.
Sounds good. And something before I forget about what you were just mentioning, what we're going to talk about here, sometimes there are pastors that do this wrong and they realize they have not been putting enough in the self-employment form. And we've also had churches who, when they figure out how much their pastors are being taxed, and will help with that as well through that kind of a gross up. So just saying that in addition to what we're talking about. But now I would like to introduce you to John Pastor. He is our friend from Churchtown, USA, and he has gotten an incorrect W-2 for his clergy status. So as you can see, boxes 3 through 6 are populated. And what we were just talking about with Kaitlin, those paychecks, they translate at the end of the year to this form, the W-2. Hopefully you guys have this form for your churches for this year. It came in the mail. We got it from your office now. So if you have that, take a look at it. Do you have numbers in boxes 3 through 6? If you do, the payroll for the year was probably done incorrectly. So except for with that one caveat Kaitlin mentioned with first year pastors, you'll probably have something in the 3 through 6 line, but depending on when you were put to that clergy status. So box 1, we're going to say the salary for John is $40,000 for the year. And then in box 14, you see where we put housing for $20,000. So we don't put $60,000, both of them in the box 1. Nope, just salary, because that's the only part that's going to be taxed for income tax only. Okay, but now let's see an updated version of what we would want to see in John's W-2. So here we see just boxes 1 and 2 populated, and boxes 3 through 6 are not. And we still see that housing allowance in box 14. Okay, so now we're going to look at a 1040. This can be overwhelming for somebody who has not prepared a 1040 before. So if you need to, come back and watch this again, walk through it slowly with your tax return from this year, the prior year. But I'll try to give you some notes on what you should be looking for. And just know that this is very basic. I've just put in what you need for clergy. There might be a lot of other things that impact your return, but we're just going to look at what your church salary and housing allowance does on a tax form, if that makes sense. Okay, so John and Sylvia Pastor, they are here again. Let's go to the bottom half of page 1. This is page 1. This is what you see when you first start your tax return. And now we're back at the part where we input figures. So you see there's no dependents, no extra things here besides just the salary and housing allowance. So in box 1, not box 1, line 1 of the 1040, you see the salary coming through at $40,000. So that makes sense, goes straight from the W-2 to your income. So we follow that down. There's a lot of other ways you can earn income, and that's what all these other boxes are. But then line 9 is totaling that up. Right now we only have that clergy tax information. And then we go to line 10, which is adjustments from Schedule 1, line 26. What's that? I'll just let you know that that is half of the social or the self-employment tax being taken out of your income. So whether it's right or wrong, we like it or not, the IRS takes that 50% of the self-employment tax that you're going to owe, and it takes it away from your pre-tax income. So it's, I think in a way, what they were trying to do is say, well, your employer generally takes this for you, but since you're your employer, we know you're not, but in the IRS's eyes, since you're self-employed, and we're going to take part of it away, but not really the full amount. So they take it away in the pre-tax calculation. So just in the income, figuring out what income your tax is going to be based on. So it's good in some ways. It takes it away, but not in the same way as salaried only employees have it. So then we go to line 11, your adjusted gross income, or some people call it AGI. You might hear it that way. And then we're going to take out the standard deduction for our married filing jointly, because Sylvia and John are both up there. And then line 15 is your taxable income. That's the income tax portion. So this is how we talked about there's two ways to be taxed as this pastor. The first one is with income tax, and that's only your salary gets taxed that way. So this is the number after all this calculation that is done by your income tax. So if we go to page 2, this is page 2 of your 1040, the top part. You see the tax for that amount is really $806. So that's okay, you know, that's okay. We're going to keep going. And then we see there's more tax, unfortunately. I'm coming through on line 23. So here we see this is the line that is impacted if you have a 4361 exemption. If you have that, there's nothing on line 23 unless you have a separate business. That's a whole nother thing. But for your clergy employment, you wouldn't have anything there. And so those get totaled up. But let's see what this line 23 is and how that's calculated. So if you go to Schedule SE, and I want you guys, if you have your tax return from the prior year, to see this is where a ton of issues pop up. There's tax preparers who might not be as familiar with clergy taxing, or if you're self-preparing and you're doing the best you can, you might not have known. So that line 2, you see how it's not the 40,000, it's not the 20,000, it's both put together. So we have clergy salary and clergy housing both being taxed through Schedule SE. Like Kaitlin mentioned earlier, we know that it has not been taxed prior to this point. So not throughout the year like general salaried employees. They don't get it taken out throughout the year. You have to true it up, make it right, all at this end of the year culmination with your tax return. So we take that $60,000, it goes through the calculation. I'm not going to bore you with all those details. Let's go to the bottom of that page, Kaitlin. But then we end up on line 12 is your self-employment tax for the year. And then you see line 13 is that 4,000 number we saw earlier, which was half of the self-employment tax that gets taken out before you hit income tax. So that's how that gets calculated. And then if we go back to the 1040, we see the total amount of tax that is owed for the year is $9,284. We saw on our W-2 that we withheld $8,000, so we owe about $1,200 for the year. So that was a lot. And if you're not familiar with tax returns, you might be wondering, wow, that's a lot of tax. I didn't realize it was going to be that much, or that's a lot different than what my tax return looked like. But let me give you some hope and some encouragement. There are ways to reduce this, right? So just like there are some hard parts about being dual status and self-employed, there's some good parts too. So with that, you can take, you might see extra income, like Kaitlin mentioned, coming through if you get a 1099 from another church, coming through Schedule C. So Schedule C is a business return. However, for ministers, that can also be where it goes through some expenses, unreimbursed expenses. We talked about how sometimes we want those to be reimbursed by the church, but if they are not, you can take them on your tax return. There's a sub form for Schedule C. So it's not just straight from Schedule C for ministers worksheet, but that gets really into the weeds, and I don't want to show you all that and confuse you further. But you can take things like, if you buy books, pastors love books. I'm married to a pastor. He loves books. It's blurred out, but full of books. You can take books that you buy that aren't purchased by the church or reimbursed by the church and take those as part of a deduction. Let's say you're driving all over town. You drive to the church and then you're driving to the hospital. You're driving to your congregant's house. You're everywhere. You drive cross states, cross state lines to go to a conference, go to the BCNE conference. Those miles can add up over time. And if they're not reimbursed by your church, which I don't think many churches do, but some do, then you can take those as a deduction on your tax return. There's an app called Mile IQ that a lot of our clients love and use. So if that's something that you want to, boost that deduction for yourself, and praise God, yes, we do, then that's a good way to do that as well. I believe I had one more, but let me check my notes real quick.
I think you had some credits.
Credits, yes. Oh yeah, if you have kids, there's child tax credits. So that can come up before and after. There's a refundable and non-refundable portions, but that's $2,000 per kid. So that's an option. There's energy efficient home and car credits available right now. There's, if you're in seminary or a college course, or your kids are in college courses and they're your dependents still, you can get tuition credits. There are ways to make it come down, or the earned income credit, which for pastors, if they have children, it can be a little bit easier to qualify for because of the salary housing split. So that's also an option as well. But there are ways to work around it and to maximize, like Kaitlin mentioned earlier, the difference between housing, your housing, the three options. There were three ways, the lesser of three to get to your housing calculation. And she said, if you don't use it all, some of it goes to your income. Well, honestly, that's the way I prefer it for my clients, because if there's a little bit coming back, it means that all of your expenses that you did for housing counted. And I'd prefer that over, well, we spent an extra, $5,000 on a kitchen renovation we weren't expecting to do, and we didn't get to take any of that as housing allowance. So typically what I instruct my clients to do is do that housing sheet and estimate out everything you do for the year. And maybe this year you're like, I didn't realize cleaning supplies and decorations and furniture counted. So save those receipts for this year. And then when you're calculating next year's, add 10% on top of it. Because I want you guys to say that, my actual housing expenses were the least amount for the year. And then you made sure you capitalized on all of that housing expenses that you actually had, because you're going to have those expenses whether you designate it as housing or not most of the time. So yeah, I think that's what I have for the clergy return. I'm sure there's questions on that, and if so, my email will pop up at the end of the slides, and feel free to email me and ask some questions. I'm happy to help. Okay.
So, Allison.
Yes.
The participants here can send you a question to your email. Is that what I heard you to say?
Yes, and now she has a slide up with my email on it.
Okay.
At the bottom awesome. Here.
Thank you.
Yeah. So, for our friends here at the BCNE, typically we're in the middle of tax season, the start of tax season over here at Wisdom. And we typically charge $400 for a personal tax return, but we are offering $100 off your return. So if all this is like over your head and you just need someone to help you walk it through it, we do a really good job of coaching our pastors. Even if it's just a one-time prep, we want you to understand, we want you to do it right. We don't want you to be in trouble. So if you want to take us up on it, we'd love to help you and prep your return for you and coach you through both the tax return and prepping for next year. So send me an email if you'd like to take advantage of that, or if you have a question about what we talked about.
Okay. So there are several questions that I don't think we're going to get to, but those can be sent to you via email.
Absolutely.
And get a response.
Yes.
In addition, just in case, when I was talking about how your payroll is set up, probably the easiest way, you can email me as well, but you can also go through our contact us page, and you could go contact, you put your information, then you can be like, I was on the BCNE webinar and I've got payroll questions. I can then email you. We do free complimentary payroll reviews. So if you sent me a sample of I like to see like 2 payrolls because it does give me a better sense of payroll journal, cash requirements, what taxes are being withheld. I can look through and give you some comments and let you know if it looks correct or doesn't and what do I see. And I mean, payroll is one of the services that we offer, and we want to make sure that you're set up correctly. So in case there were any payroll questions or somebody's like, I wonder, that's an easy way of reaching out to either Allison or I. It goes to a partner's email, so we both get to see it. So if you have questions on both, you can also go that route, and then we both could answer you via that email. So two ways to get a hold of us.
Okay, and this question is actually for Sandy. I don't want to speak out of turn, but this particular webinar is being archived. Is that correct?
Yep, it's archived and it's been recorded. And if most of you probably saw, we're going to be doing this same webinar next Tuesday in the evening for pastors that, couldn't jump on during this time. And we know that, some, if you're only got your 45 minutes, you have to jump off now, that's fine. But there are a couple of questions, though, I think that if you wouldn't mind answering. One of them I thought was very interesting. They said, well, if why the 1099 if people know that it's illegal? Was there a history for the fact that it wasn't used to be illegal, if that was the way they did it?
Yeah, so there's kind of 2 answers. Number 1,
Yep.
It wasn't illegal until I think it was 1954 or something like that. Yeah. Number 2, the thing that we find is people don't know that it's illegal. That's why that's why we do this. This is why we're even having this webinar, is that there are a lot of churches that are like, well, what do you mean we're not supposed to do it that way? So I think there's a lot of people that do it without knowing that it's wrong. And that's a lot of things. I mean, payroll and clergy, there's a reason why wisdom is around, because it's, as much as we try to make it as simple as possible, there are a lot of really interesting and unique and specific things that churches and ministry do. They're not clear cut. It's not cookie cutter. It's very unique and different. And so there's a lot of people that don't know it's illegal. So that's why we say it. And we're not trying to cause alarm. We just want to make sure that you guys are set up correctly and that the IRS has no reasons to, start asking questions. We want things to be righteous, and we want things to be set up so that churches can just continue expanding the kingdom.
Mm-hmm. So, like, for example, we have a pastor on that's a small pastor of a small church, and they give him a stipend. And so, he's wondering, how is that? They wouldn't put that on a 1099. That would be also on a W-2, correct?
Yes, so that would be like a salary. So if they're not paying you a lot and they're considering it a stipend, my recommendation is that you actually consider the housing allowance, because of the 2, it's taxed the least. And I would assume probably you're receiving less than what you would be claiming as what your full housing would be. So it puts you in the best tax position.
Right.
But yes, that would be if they're paying you a stipend. Stipend is a word that we use. It's not a word that the IRS uses. They consider that a salary amount, just a very small salary amount.
Right. Well, the caveat for this pastor is that he actually lives in the church. So he, so he can't use, I don't think, the housing allowance.
Well, so he would be receiving, so that's a good thing. If you are living in a church property, that is considered a parsonage, and it's actually a part of should be set up as part of your compensation. So when we talked about in-kind versus cash housing, in-kind is also a parsonage. So living in a church property. The IRS would consider that as part of your compensation package. But
Okay.
also at that point, it would be good to make sure that all of your housing expenses are actually covered by the church as part of that part of your compensation. Because we do find that there's a lot of expenses that people don't think about, and it may decrease part of that stipend or even completely cover, depending on how much the church covers.
Okay, okay, that's good. So, and he saw that your email, so hopefully he'll get in touch with you if he has further questions. Now, one other question. So what happens when a church wants to bless their pastor and pay the Sika part? Is there something that the church has to do or the pastor needs to do when we give them that money?
So it needs to be tracked in such a way that it would show up on the W-2, and it would show up in box 1 with salary. So the IRS looks at that the same as like a bonus or an increase, a gross up to salary. So it would show up in box 1, and then would be taxed for income tax and Sika.
And you were talking, Kaitlin, about that. I think if I understood it correctly, you kind of play with the numbers to bump it up enough so it cancels out versus
Yeah.
now I got more taxes and
Yeah.
okay.
Yep.
Right.
So that's one thing to be aware of, is that just when you give it, it does increase their tax position. It's still helpful. So we don't want to say that and like scare people away from it. It's just, you should know that. We have had people where the church blessed and they didn't know, and then they had a larger tax bill than anticipated because they weren't aware that they were going to be taxed on it and they didn't withhold enough. So that's the part of it that you have to be aware of. But yeah, we do at Wisdom, we do something called I call it a rolling calculation, because in my head that makes sense. And it's kind of, you put the number in, you see how it changes the tax position, 50% then changes again. And then you can actually keep using that number and adjusting it until it begins to even out. And you've kind of hit this, like, if it was a teeter-totter, like it begins to just even, and that's where you kind of want to stay. It's a blessing anyway, as long as the pastor knows how it hits their taxes, how it changes that, and that they're planning accordingly. So whether federal withholding line or quarterly tax estimates, like that would be important for them to just plan ahead for.
Okay. And then I see a pastor is asking about the life insurance or health insurance. Is that considered taxable? And how about retirement? Like Guidestone, you're familiar with them. Is that all taxable as well?
I'll talk about the retirement for a second. It depends on the package that the church has. So sometimes you can have pre-tax contributions. It's similar to if you're outside the ministry. There's pre-tax contributions and post-tax contributions. If the church contributes, Kaitlin, remind me, is that taxable or not?
I don't think it's taxable, because then they would be, I don't think it's taxable. It's the employee withholding, how that affects.
Just how the employee contributes. So if you have a post-tax contribution, then it would be obviously taxable before you contribute. But if it's pre-tax and your congregation has that type of plan set up, then it won't be included in your compensation.
Yeah, it decreases your taxable compensation. The other ones, so healthcare, that one is, you're going to hear on a lot of these. The answer is it depends on what you've signed up for, because it really does. So the health plan, it depends. Do you have a group health plan? If it's a group health plan, most of those are set up in such a way that it would be non-taxable. That'd be like the taxable fringe. If it's not a qualified group health plan or a qualified plan, then it's probably taxable. That is what we found. But it does really depend on what it is that you've opted into. And I believe that life insurance, I think that's non-taxable. I think that's a non-taxable fringe benefit. I can double check. That's one that not a lot of our clients have. And so every time it comes up, I have to double check it. But my gut feeling is that it's not And I think every time I ask the question, I'm like, yeah, I should remember this. But if they want to email us or put it in the contact, I can double check that and send them an email back.
Got it. And the other thing he says is when he started in his current position, he was told to add an accountable reimbursement category to my pay because it's not taxed. Have you ever heard of that?
So I'm assuming he's talking about for ministry expenses.
Okay.
And so ministry expenses do have to be considered what's called an accountable plan. And what that means is that he has to be turning in like receipts for what he's getting reimbursed for. And as long as he's doing that, the IRS considers it an accountable plan, and it's not taxable. That's not something we were going to focus, but that is probably a good thing to mention. If you are getting reimbursed but not providing receipts to your church for the things that you're getting reimbursed, the IRS does not consider that part of an accountable plan, and they would actually consider that taxable compensation. So that's just a good reminder. Please turn in your receipts to your churches when you're asking for reimbursements.
So the more you account for and have receipts for, the better.
Yes. So on the group health plan, the accountable part of that is, I think the IRS jargon is you have to have a, it's called a TPA. What is it called? A third-party administrator. So there are companies who are authorized by the IRS to be third-party approvers. And so that would mean that there would be something in there where you would submit reimbursements. The company would approve them as, yeah, these fall in line with what the IRS says can be tax-free reimbursement for health insurance, and they fall within this group health plan, and then those are tax-free reimbursements. So if they're talking about health plan, that is the law as of right now. It did not used to be that way. So if that individual has been at that church for 10 years or more, it would have been legal to do it where they just turned it into their church. It is not legal any longer. So if they want to reach out, I can give them some additional research information about QSARAs and stuff like that. It did change, I think, like 8 years ago, and not a lot of churches know about it. So yeah.
Okay, that's good. That's good to know. That's good to know. All right, Robbie, any more questions you have from your end? You're muted, sir. Robbie's.
Yes, but I'm going to email them
Okay.
my questions because I have a lot of them. And it seems like in this whole area, there's kind of a framework, but then individually it gets really nuanced.
Yeah,
Absolutely.
Yeah. Yeah. So don't hesitate. You see the contact there. We want to encourage you to do that. And again, if you don't have anybody that's doing your personal taxes, or you're just not sure you're getting the best advice at this point, you may want to reach out to them. And there's certainly work with the BCNE. We've had a great partnership with them. So we just want to encourage you. And remember, we're going to be doing this again on the 20th. And so if you want to come for a rewind, you can. We'll certainly be, recording both of them, and we'll, send those out and put those out for everybody. And we will make sure that you also, if you didn't catch the links that we put in, we'll send you those so you can get a hold of those as well. And if there's any other resource sheets that they have that they can send us, we'll send them your way. So thank you so much, Kaitlin. Thank you, Allison. Thank you, Robbie. This was Robbie's premier hosting duties today, so you did well, sir.
Debut.
Debut, there you go. Okay, all right. Well, we want to thank everybody for taking the time today to join us, and we hope that you'll join us for another webinar in the future. We have some stuff coming up in the months of March and April, and we'll let you know about those along the way. So again, thank you, everyone, and we will look forward to seeing you on another webinar. Take care, everybody. Have a blessed day.
Thank you, Kaitlin. Thank you, Allison.
Thank
Thank
you.
you. Appreciate it.